Okay, so today we're going to look at issue of shares, and in particular the two types, the rights issue and the bonus issues. So I'm going to go through two exam questions, and we're going to pick out key stuff. So have a read of them before we go through them and follow through. So the directors of TJ Limited needed to raise some funds to finance the expansion of the business. They decided to make a rights issue of ordinary shares on the basis of one new share for every 4 shares held at a price of £1.20 each. The issue is fully subscribed. So that means all the current shareholders were given a new share for every 4 shares they had. So if they had 40 shares, they get 10 new shares. Now they would have to pay for these, because like a rights issue, you have to pay. It's like a normal issue. The only difference between a rights issue and a normal issue is a rights issue is only for existing shareholders. And no new people can come into the business, it's just existing ones. And then there's the information. So capital and reserves just means equity, ordinary shares just mean issue share capital, and profit and loss account, well, that's just to retain earnings. So before we read what the question wants to do, there's a few things we can pick out. We can pick out the words rights issue. So what is affected by a rights issue? Well, the issued share capital and the share premium and cash, they all go up, they all increase. How many shares are there currently? Well, to work it out, we use that formula, the issued share capital divided by the nominal value. So we need to find those two numbers. The issued share capital is the 400,000 and the nominal value is the £1. So 400,000 divided by £1 is 400,000 shares. And then we can work out how many new shares there are. So remember the little formula we talked about was the number of shares divided by the old ratio times by the new ratio. So we need to find those numbers. So the new ratio is 1 and the old ratio is 4. So we're going to do 400,000 because that's the number of shares divided by 4 times by 1, which gives us 100,000. That's how many new shares. Then how much is the issued share capital increased by? Well, it increases by the new shares times the nominal value. Remember, for issued share capital, it's just the nominal value we look at. So 100,000 times by the £1 gives us £100,000. How much is the share premium per share increased? How much is the share premium per share? Well, again, we've got a formula for that. It's the share price, take away the nominal value. Well, the share price, we need to find that. Is £1.20. So £1.20, take away £1, it's 20p. So the share premium per share is 20p. So how much is the share premium increased by? Well, it's the number of shares times by the share premium per share. So 100,000 shares times 20p gives us £20,000. So the issued share capital goes up by 100,000, share premium goes up by 20,000. So the cash will go up by both of those. Cash will go up by 120,000 if we needed to know that. Okay, now we can look at the question with that information in mind. So I'm just going to stick it in the corner. Prepare the capital and reserve section of the balance sheet, which remember means soft, saving a financial position, immediately after the rights issue. So first of all, what does that mean? That just means the equity section. And what headings are there in the equity section? We have issued share capital, share premium, revaluation reserve, and retained earnings. So start off with the heading equity and the pound symbol. So the issued share capital goes up by 100,000. So 400,000 plus 100,000 is 500,000. Share premium goes up by 20,000. So 40,000 plus 20,000 is 60,000. And the profit and loss account, which is the retained earnings, doesn't go up by anything. So it stays the same. Add them up and we get 745,642. Now that was 6 marks to do that. Wasn't too tricky. Well, for you, this question was to define the term capital reserves. Give one example of a capital reserve. Well, capital reserve is profit made from non-trading activities. So that could be to do with your shares. It could be to do with revaluation. The definition, profits arising from non-trading activities. And example, there's 2 that you could say. You could say share premium, or you could say revaluation reserve. And define the term revenue reserves and give one example. So this is kind of the opposite. This is profits that arise from normal trading activities. And the only example of that is the retained earnings. Yeah, issued share capital is just capital, is just equity anyway. Okay, so that's that exam question done. So next one. So again, let's have a read of it. The directors of Angton Limited decided to restructure the balance sheet so that the size and success of business would be more accurately reflected. So the equity section of the balance sheet at the 1st of January 2012 is shown below, and we have the numbers. So we have issued share capital, share premium, retained earnings. So again, before looking at the question, we can work out the number of shares. So we use the formula issued share capital divided by nominal value. So 1,250, that's the issued share capital, divided by the 20p, which is the nominal value, gives us 6,250 shares currently. Okay, so I'm going to keep track of all the information we've worked out so far, so that's in the corner. So during the year ended 31st December 2012, the directors approved the following actions. So in February, payment of a dividend of £1.50 per share. The dividend was paid on all shares in issue on the 1st of January 2012. So first of all, picking out the word dividend, and what does the payment of dividends affect? Well, hopefully you can remember it affects our retained earnings and our cash. It makes both of those go down. We lose money for dividends, we pay money. How much is the dividend? Well, to work it out, it's the number of shares times the dividend amount, and the dividend amount is £1.50, and we worked out, you can see in the box that the shares is 6,250, so times them together and we get 9,375. Okay, so I can go my box now, and I've put that affects the retained earnings. I haven't bothered putting cash there because we're only doing the equity section. Yeah, the cash would come under current assets, remember. Number 2, in April, revaluation of non-current assets of the business resulted in an increase in the value of the assets of £150,000. So again, I'm picking on the word revaluation. What does that affect? Well, that affects the revaluation reserve and the non-current assets. How much is the revaluation surplus? The formula we normally use is the revalued amount taken with the net book value. However, we don't have either of those values, but the question tells us what the actual increase is. So the increase is 150,000, so that must be 150,000. As simple as that. Okay, so there's all my information. You'll see why I had moved from the corner. Number 3, in May, bonus issue of shares on the basis of 50 new shares for every 1 existing share. The reserves were maintained in their most distributable form. So a key word to pick up there is bonus issue. Now remember, that's different to a rights issue in the aspect that we don't sell them, we give them. So it's still just to existing shareholders, but instead of selling them extra shares, we give them extra shares. So our issued share capital will still go up. However, we don't get money for it, so we'll have to fund it ourselves. So first question, what does the bonus issue affect? Well, it affects the issued share capital, that goes up, and maybe a combination of share premium, revaluation reserve, and retained earnings. Now, it could be all 3 are affected, it could just be 1 affected. It depends how much we currently got in each of those accounts. How many new shares? So we use the formula, number of shares divided by old ratio times by new ratio. So the new ratio is 50 new shares, 1 existing share, so 1's my old. So 6,250 divided by 1 times by 50 gives us 312,500 pounds, 500 shares, sorry. How much is the issued share capital increased by? So how much is that worth? Well, we've got the formula new shares times nominal value. So the nominal value was 20p. So do the number of shares times by 20p gives us £62,500. Now, how do we fund those shares? If we're not charging for them, what do we use to fund them? And this is where we use our reserves to fund them. Now, we've got a choice. We can use our capital reserves, so our our revaluation or our share premium, or we can use our revenue reserves, so the retained earnings. But in the question, it says the reserves were maintained in their most distributional form. So remember, the retained earnings are what we can distribute back as dividends. So we want to try and maintain those. We don't want to use those up. So we should use the capital reserves first. So that means we should use the share premium and the revaluation first. So if we use the share premium first, how much can we use of it? £25,000. We can use all of it up. So how much is left to fund from the 62,500? 37,500. So we'll use our revaluation reserve for that. That's where we'll get it from. So we normally use it in the order: we use up all the share premium if we can, then we use up all the revaluation reserve if we need to. And if we still need more funds, that's when we dip into the retained earnings. But that we kind of try and leave that as the last reserve. There's a bit of a pun there, the word reserve. I'm sure you all spotted it. Okay. So I've added to the box the number of new shares and the effect of the bonus issue. And point number 4, in September, there was a payment of dividend of 30p per share. This dividend was paid on all shares in issue on 31st of August 2012. So the first question is, what does the payment of dividends affect? So it's the same as before. It's the retained earnings in cash. How many shares are there now? So we did have 6,250. The bonus issue gives 312,500 more. So altogether we've got 318,750. So how much the dividend paid? So it's the number of shares times by the dividend amount. So we times that big number by 30p and get 75,650. And that will affect the retained earnings and cash. So I can put that in my box now. And the last bit, this was an additional note. The profit for the year ended 31st December 2012 was £356,840. The directors have made a provision for tax of £71,368. So first of all, profit, what does that affect? It affects our retained earnings, it increases it. So what is the profit after tax? Well, we do profit before tax, take away tax. So we do that number, take away that number. And we get £285,472. So I can now put that in my box as well. Okay, now we can actually start answering the questions. So calculate the dividend paid for February 2012. And this is what I'm going to show you. We get marks very quickly now. So we've done all the hard work. Now we just get to get all the marks. So this question was worth 3 marks. All I need to do is look in the box, double check which one was February. And that was number 1. So that's the first dividends paid. So it's just 9,375. 3 marks. B, calculate the value of the bonds that issued shares. Well, the value is how much the issued share capital went up by. It's just £62,500. And that was worth 5 marks. Oh, sorry, 2 marks. It's next one's 5. That was worth 2 marks. Easy. C, calculate dividend paid in September 2012. So check which one September was. That was number 4. So that was the last dividends paid. So it's just £95,625. Sorry, I typed that in wrong. That should be 595, not 92. And that was worth 5 marks. We've done all the hard work already. And then part D, worth 12 marks, was make a statement of change in equity, so saucy. So this is when we just need our numbers in the box and we can fill it in and get 12 easy marks. So we start off with the balances at the 1st of January 2012, that's the beginning of the year. So to get those balances, we look back at the question and do a list for us. So all we need to do is put them in the correct places. And we get 1 mark for doing that. Then we can do them in any order we want. So I've chosen to do dividends first. And it's best to put the total dividends together instead of having 2 rows for dividends. So you add the dividends together and you get 105,000. So it goes there. 2 marks for that. Now this exam was a bit mean. If you put them separately, you only got 1 mark. So next one, I've chosen to do the revaluation surplus, which increases the revaluation reserve by 150,000. So that's 1 mark. Issue of shares. Well, the ordinary shares go up, share premium goes down, and revaluation goes down. So we get 1 mark for ordinary shares and 1 mark for share premium. Sorry, that second mark was for getting share premium and revaluation. Then profit for the year is that total there, 2 marks for getting that number in there. Then all we have to do is total them up, and we get 1 mark for each. And that's it. Easy 12 marks if you can get an exam. In fact, that question altogether was worth 22 marks and definitely didn't take us 22 minutes. Right, see if you can try the 3 exam questions I give you yourself.